going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Lab. You don't know, this is our live market analysis where we show you all of the things that's going on in the market. We tell you what price levels you need to look at, what financial pairs you need to keep your eyes on. And if you don't know, I'm half of the Bison Trading Show crew. I go by the name of Top Trade Future, and of course, I'm here with my guy.
You know the one of one at I'm the D guy, aka Pro Financial. Man, I hope you guys have your notebooks and your pens, cause we going live back again. My boy is back, so you already know we finna drop some knowledge tonight. So get your notebooks and pens and let's get these levels going.
Right. So you guys know it's been about a month since we've been on and had to really break down these charts on the Dow Jones. So it's a lot that we need to cover. But from what we've been talking about on Friday, I hope you guys are paying attention. If you didn't catch it, make sure you go back there on our YouTube page, our Friday live sessions. We still do those. And I've been telling you guys about this pullback in the Dow Jones. Now, what I want to do is I want to refer back to the last previous pullback that I talked to you guys about way back at the beginning of June and also way back in May. If you guys remember those episodes, I told you that whenever we have big downward movement and big downward pressure on the Dow Jones, we always want to look for strong demand levels where we can look to buy from. There has never been a drop in the Dow Jones ever in history that hasn't been recovered from. That's 100% fact. So we want to take advantage of that and use that when we see those opportunities present themselves. So most recently, if we look at these candles that happened on July 16th and July 17th, let's measure this down move right here. This down move was about 1,300 points on the Dow Jones. A big move, very big move. And notice where that down move originated from. Where did we start from when that downtrend kind of got picked up? It started from all-time highs. And that's a pattern that we can see many times on the Dow Jones and also many times on other pairs as well, where prices hit an all-time high, then they pull back. And then they come back and try and test that high, either break it or retest it one more time. And that's kind of what we've been doing ever since we made this high on May 11th. If we wanted to box this up, we could really draw a bigger zone on the daily chart from let's call it 35,000, all the way back down to around 33,500. We've been trading in that range for the past, really the whole summer. That's what we've been doing. So we're seeing that we're making our move back up. Everything that we lost on the 16th and 17th is pretty much been recovered. Not all the way, and that kind of leads us to where we are right now, and it actually sets us up for a good trade because we know, with I would say about 85% confident that the market is probably coming back up to test this supply zone where the market likes to come back up to that 35,000 level. It's extremely important, very important. As we can see, we already had the V pattern reversal. A move like this down move right here, normally in any other financial instrument, this would lead to lower prices and a continuous downtrend. But the Dow Jones has a bias to the upside. Nobody wants to short it. People are just waiting for it to go down so they can buy at lower prices. And that's what we saw happen right here. We got the V pattern bounce. We had our higher low. Boom. Made a double bottom. Big flags all the way up. Big flags all the way up. Now we have a continuous series of higher lows. So that tells us the downtrend pretty much is over. The uptrend is back on, and we're pretty much aiming for that 35,000 level. Right now, we're at 34,776. So you still have a good 250 points to go until you hit that level. So all we need to do is look for entry points now that we understand what the overall market direction is. So let's break it down to the 15-minute chart to see exactly what we want to do and how we want to play this thing so that tomorrow we can come into our live session with our levels already marked up, ready to go. So when we look at where we're at right now, we definitely have a supply zone up here at 34,775 without a doubt. So going long right now is not recommended because we never want to buy at higher prices. We want to buy low, sell high, 100% of the time, no excuses, every time, no excuses. So what we want to do is wait for prices to come back to areas that used to be previous demand zones. You want to find those demand zones, all you do is look left on your chart. So when we look left, what do we see? We see that this level at 700 where I have the crosshair kind of lines up as an important demand zone. It's not only been important most recently, but it's also been resistance before when prices were below it, and it's been support before way back a couple days ago on July 21st. So we know that these levels are holding up. It's also a major hold number level, 700 even. So that could be a great potential area for us to look to go long. So I would recommend 34,700. But because the Dow Jones is such a volatile pair, I will also recommend 34,600 because that's really the ultimate demand zone as we can see. We have a lot of wick, a lot of consolidation down in that area, telling us that sellers tried to push prices past there, but every time they tried, the buyers was like, nah, not this time either. So if we can get it to come back down there, we might be able to participate in that movement. So overall, I'm looking for the long trade when it comes to the Dow Jones, either at 34,700 or 34,600. And in both of those scenarios, I'm looking to take it back up to 35,000 even and call it a day. So that's the trade that I'm looking for.
You'll say those
we'll
two.
See how it.
You'll say those two levels
I'm
for
look,
me. Say those two levels for me one more time.
So I'm looking for 34,700 and then 34,600. Looking to take it back up to a profit target of about 35,000 even. You can either catch a nice 300 points from that move or a nice 400 points. But either way, we have something really nice setting up for us during tomorrow's live trading session. So let's go back to that hourly one more time just to confirm the trend is up. We pull up to 50, see that it's above it. We pull up to 20, prices are above. Go back up to the 4 hours, same scenario. Go back up to the daily. Boom. Everything lines up, everything fits. So that's what I'm looking for tomorrow. Looking for the long move. So with that being said, go ahead, pass it to Darren, and let's get his thoughts on this.
All right, guys. So, by the way, that was a good explanation, Ty, on your behalf.
Thanks.
So you already know, guys. We always have to do our top-down analysis. For anyone new, that's pretty much we just looking at our higher time frames and just pretty much trying to determine a direction in which trade or what we want to, which direction we want to buy into. So let's go ahead and pop on our monthly. And for those intraday traders like myself, we're pretty much just looking at the monthly just to get an idea of where the moving average is and the higher highs and higher lows stand on the chart. So unhide the moving averages for me, and then hide the volume. So we pretty much see higher highs and higher lows. There hasn't really been any sign of down movement. Bears are not in the market right now. The 20 is above the 50, so those are the pretty much two things we're just pretty much trying to figure out is where are at least for myself for the moving averages strategy, because my strategy is kind of circled. Excuse me, guys, I have hiccups. Like myself, my strategy is based around the moving averages, and pretty much the idea is I need all of them to line up or be the same on all three higher time frames, monthly, weekly, daily. And at least for me, in my experience, I noticed that when that does happen, those trades are higher probability trades, and we only take high probability trades. We're not in here to just play. We want to make sure when we do hop in the market, we execute. So pretty much higher highs, higher lows are on the screen. The 20 is above the 50. Let's flash down to the weekly. It's kind of same story, but it's a little bit more cleaner story or a crisper story. The 20 is still above the moving average. The 20 still is above the 50 moving average. But I noticed that the market plays very close to the 20. It kind of looks like it bounces right off of it and kind of keeps going. I guess to me it looks like when it does also hit the moving average, it comes down and hit the 50. So um, I'm not gonna say in every case, but it looked like most of the cases when it did go up, it came all the way down and hit the 50 moving average first, and then it made its way up again. So The 20 is above the 50 on this one, so let's flash down to the daily. All right, and so by the time we get down to the daily, we should kind of have an idea where we want to go. Um, the 20 is above the 50 on this one, so all of them do line up to get in the market for a buy. But what kind of worries me on this one is that we're kind of in a sensitive area, meaning that like every time it came up into this area, it looked like it made its way down. So I can kind of see it going up and retesting some of these areas, these high areas where we got rejected before, because we got rejected at least one, two, three, like 4 or 5 times. So I think it's still room to move up. So that's why I say I still would want to be on the buy, but I would definitely, get my level for take profit and get out the market, because I kind of feel like it's gonna kind of come back up and retest. Uh, I think 35,000. Yeah, so up to 35,000, and then when we get there, then I can kind of see it coming back down. So that those levels that you said, 34,007 and 34,006, those are actually really really good levels, and taking it up to the 35,000, that's a good take profit level too. So actually, let me drop down to the 2 hour. Let me see if I can see maybe another level that I want to unhide your signals. Okay. All right. So zoom in a little bit. So I do definitely agree that for the even for the possible long term, I'm not gonna say long term. I'm just gonna say for the short period of time, I could definitely see it going up. But I think in the long term, I think I can definitely see it coming back down, trying to come to retest some levels that it has broken previous. So a level that I definitely want to see it come to is um, where the bottom of the area. So go to the bottom wick right there. No, no, not that one. That's sitting on a 20. Yeah. So and guys, I definitely don't like one particular price. So I usually like to put a zone. So actually, follow this price right here over to the left where it's above those highs. Right there. Stop right there. Now come down. Come down. Yep, those highs. So I would pretty much want a little zone box where the bottom of the box is those highs, and the top of the box is the bottom of those wicks. Yeah. So I would definitely want to see it come back down into those levels uh, before we take it back up to retest those highs at 35,000. So we always want to buy low, sell high, and like Tiberius said, we never want to buy high. You definitely want to make sure that you want to get prices at low enough levels to get buyers to want to get into the market. But also, I was definitely about to say something just now. Oh shoot! I definitely forgot what I was saying. Oh, what I was gonna say is, even though that me and Tiberius do agree on going long, um, definitely that's why Forex is such a good market. Is because you can even still make money, going for the short. Because honestly, we would need a down move to happen first before we go take our position to go long. So, there's room for both parties to eat, and you just have to know when and where to get in at. But I just feel like it might not even be worth it to take it for the short. Actually, see how many percentage or whatever it is from where we are right now to the bottom of the box, just to say. So I mean, is that good, Todd? 75%.
Yeah, 254 points. You could eat off of that move right there. You can anybody.
Okay, so if you can eat off that move, sellers, I definitely believe that is a very very great move. So at least for me, I would definitely want to wait for a bigger plate, and wait for it to come down. And once we get that rejection, or hopefully get that rejection in that area, I would definitely want to take it from the bottom of the box back up to like 34.9 or 34.8. I wouldn't take it all the way up to 35. See how much percentage that is from the bottom of the box to 35. 34.8. So that's definitely more than what we had at the bottom. So, I mean, you can definitely choose your poison. So for me, I definitely want to just follow the trend and just kind of follow the up movement, which it has been doing. So that's pretty much. Oh yeah, let me write these levels down. Matter of fact, so um, take your mouse and go inside the box. So the bottom of the box is 34. I want to make it a round number. So 34.5. 34,500. Yep. Is that it? Is that a lot? Okay, yeah. So to go in for the buy, 34,500. Uh, and go to the top of the box. 34,600. And I'll be taking it up to 34.8 or 30. I might say 34.9. See, matter of fact, grab the ruler again and see how much. I want to see how much it is. Do 34.8 first. All right, do 34.9. All right, yeah, I'm gonna do 34.9 to take profit to 34.9. And that's pretty much my analysis for this particular pair.
Alrighty, so that's the Dow Jones, you guys. We'll be going over that tomorrow during our live session too. You know, on a Friday when the market opens, the Dow Jones is always moving. So make sure you tap in tomorrow morning, 9:15 to 9:20 a.m. We'll be hopping on sometime during that period, and we'll be breaking down these pairs. And another pair that we'll be looking at also. I know it's been a while since we've gone over this one. So I have some real good news for you when it comes to dollar switch. You know, this is one of my favorite pairs. I've been watching it since 2015. And it seems like, well, actually, before we even get into what's going on the daily, let's start our top down analysis. Let's start from the monthly chart. Because what I want to show you is that if we go back to 2015, we can see that for the most part, prices have been trading in a range between around 89 cents at the bottom and around $1 at the top. Now that's very interesting because if we actually nail that down, we can pretty much say the dollar Swiss has been trading between $1 and 90 cents for about 6 years. Every time it hits 90 cents, it struggles a little bit, but over time it ends up working its way back up into the 90s, back up into that dollar level. And it takes time though, because remember, we're looking at a monthly chart. So every candle represents 1 month. So think about how many candles it takes for a move to Ash boy hungry. How many think about how many candles it would take for a move to actually turn around. You know, it might take 7, 8, 9, 10, maybe 12 candles. On a monthly chart, that could be a whole year. So we got to be patient with this setup. But from what we see, it's starting to look very nice. Because the reason I say that is we were in a downtrend. Remember the analysis we always did for a long time? I told you guys, ever since April of 2019, that's the last time we hit $1. And from that point forward, over the past 2 years, we worked our way all the way back down to that 90 cents level, and we came down to a low of about 88.75. Right? So it was a little bit of an overshoot, a little bit of a false breakout. But look at what happened after that from the beginning of the year. From January 1st, we've had nothing but an uptrend. And it looks kind of blurry on the monthly, so I want to break it down to the weekly so you guys can see it a little bit better. So when we look at the weekly, let's start from the beginning of the year. prices bounced off of that 88 level, they had a huge move at the beginning of the year from January to March. So that right there was our first little inclination that buyers wanted to push this market higher. But of course, the sellers are always going to come back in because the overall trend is still down, right? So the sellers came back in and did their thing like they have been doing the past 2 years. What I found very interesting was that around May, we ended up forming a higher low. Because if the downtrend was to continue like it should, coming off of a strong momentum move like this, we should have broke past 88 and made a new low somewhere down at 87, 86. But when we were not able to do that, that gave us one clue that the buyers were stepping in. The first clue already was the initial up movement that we had. Pulled back down, created a higher low. That's clue number two. Off of that higher low, what do we see on a weekly chart? We see a huge move to the upside that happened in June. That right there is a flag. If we look back historically, especially from the beginning of the year, and see what the dollar Swiss has done after it's made flags, this was the most recent flag. It came up for about 3 weeks, and then you had another 3 weeks where it consolidated, and you had chances day after day to get in. You guys go back to my Instagram page for Thai Trade Futures. I have a chart and I have a trade that actually discusses this exact setup. This is where I went long the last time. Somewhere within this general area at 92, was able to catch 100 plus pips off of it. So check that out if you haven't. All of those lessons are still relevant now because we're coming right back into that same scenario. Notice how the price pattern that we're looking at now is almost identical to what we saw back in March. So it's not guaranteed that it could happen that way. But the way the market is setting up, it's looking very appealing for my liking right now. In terms of the long term, you want to hold this trade for about 3, 4, 5 months, it can definitely be very profitable. That's what I'm looking to do because dollar Swiss is one of my favorite pairs of swing trades. So when we look at the daily chart, everything that we just mentioned continues to line up. We can see the flag with a lot more detail now. Notice how the flag popped up and it formed a clear level of support. The clear level of support is down here at 91.30. Without a doubt, we can say that this is a very strong demand zone. And if we follow it over to the left, we see that it lines up with areas that used to be previous resistance levels, which now they become a duality level where what used to be resistance now becomes support once prices break over it, which they did with our flag formation. So, in my opinion, you can really go long anywhere between 91.30 and where we're at right now at 92 even, and you could probably hold it back up. If you want to go long term, I would say $1. But if you want to be reasonable and base it off of what the chart says and not what your mind says, we really want to take it back up to around 94.25, 94.50. That's the ideal level, and then we'll reevaluate whether or not we want to continue to hold it once it gets to those price points. So for me, I'm looking for that long trade based on the monthly, the weekly, and the daily.
My fault. You said your levels was 91,300 or 92 flat.
Yeah, I would say 91.30. Anywhere you can buy, really, you have the green light anywhere between 92 and 91.30. Anything outside of that, we need to reevaluate and be a little bit patient.
Gotcha.
So when we look at the 4-hour and the hourly chart, it's a little bit shaky. It's not in terms of being long. It's real choppy. So that's why I look at dollar Swiss more so for the long term. Because just from studying it for so long, I know that move to $1 is coming. It's not a matter of if or when. It's just how patient can you be to wait for it to get back to $1. I think, honestly, by the end of the year, it could potentially be back at that price level. So, well, that's a lot of time. A lot of things can happen in between now and then. So we'll have to see how it goes. But for right now, I like the potential long trade that's setting up right now. So, D, I know it's been a while since we discussed dollar Swiss. So tell me what you're seeing now on this pair right here.
All right, so just looking at it just right here, right now, it kind of sticks out to me like with the head and shoulders pattern, where we have the head clean in the middle. Well, not clean, but it has a head, nope, at the top. At 94, yep, right here, that's the head. That whole entire area, that's the head. Even that little area to the left is a head. And then right over October, we have our first, not first, but our left shoulder. From there, pulling it down all the way to where it hits that wick. You see over to the left, right there, that little wick. No, you went too far, too fast. That one. Yep. So from there to the top up there, where would be like the shoulder level, and I would just follow that over. So and hide just your signals right quick before I do the top down analysis. Yeah, you have it highlighted right there to where that head and shoulders band, I would want to call it, is where it starts at the left shoulder and it slides all the way over, and then we can see if it breaks above that area, we know the head and shoulders pattern is no good. But if it does come up in that area, reject or do some type of fake out and come back down, then the head and shoulders was valid. So with that said, let's do our top down analysis. And I feel like what Tiberius said, up is definitely true. Um, After that, but let's do the top down analysis. Let's go to the monthly. Hide your signals and unhide the 20 and the 50. All right, so monthly, like Tiberius said, once it back dollar, it comes down and it's been making its way down for a long time. And I think even Tiberius kind of showed me it when we were looking at it when we used to go to school. He used to show me that's how long he's been trading this. So uh, we got the down movement. The market came up to retest that 20. And like you guys see, it's always a pattern. The market likes to hug around that 20 moving average. And that's a good signal to let us know that if it does reject at the 20 or if it does break it, that lets us know that 20 is important in terms of where you're going to put in your trade. So uh, we have the market made it down movement. It came up. We had that lower high and lower low. Ever since it came down and broke that dollar area, we had a lower low. Let's flash down to the weekly, because like we said, on the monthly, we're only looking for the lower lows or lower highs and the positioning of the moving averages. Um, so here on the weekly, we have that wick down at the bottom at 2021. We had that big up movement where it was like a fake out. It really just came up to that level and it broke that used to be a high. Go to over to the left, right where that high. Go over to the left. Yep, that high up. So pretty much it was a fake out for that. A lot of buyers thought that when that area got broken and we even got a retest to come back down to even hit the 50 moving average and then it shot up. And I'm pretty sure a lot of buyers lost a lot of money that day because they didn't wait for the completion of the candle. That is very important, you guys. Like when you hop into a trade, go down to a smaller time frame so you can see the complete close in that area, so to say. But yeah, with that said, so we made that high at the top. It came all the way back down. That lower area actually lines right up to that high when you follow that price over. You see that wick where it's going right through the 20 moving average down at the bottom? No. Go down to yep, right there. Yep. Go to the top of that candle. Yep. So that right there. So it literally made that low, then it came up. The wick bust through the 20, came down, completely closed underneath the 20. We got the good retest, and then the market definitely the retest right there. That's the area where it retested. That where Tiberius just pointed, and we got a nice movement up. So the next up move that just happened, notice it was now that's a lower high. So, excuse me, not a lower high, a higher low. Because once it hit 2021, that low at the bottom was higher. So that's a higher low. So now we should definitely see movement up to make the next leg and the next higher high. So we have 2021 that low, then the next level up, You see that? So that's a low right there. Yep. And then that's the next level, a higher low. So now we should be seeing the market break that high around 94 flat, because it should be making its next leg in the higher high formation. So if you know, the higher higher formation is pretty much like a staircase, where we got the first one, we got a nice high. Yeah, so we first step is down there at the bottom, and then we got the nice push up. So notice, no follow my. Yep, we got a nice push up that created a higher high. Then the market came down, and it lined up with those wicks over to the left of it, which was a nice little duality level where Tiberius pointed before, where it's busting through the 20 moving average. That became the first higher low. So now with that higher low form, we should be seeing the market break that high at the top to make the next leg, number 2 of the higher high stage. So let's flash down to the daily. All right, so it's an even kind of cleaner picture, like where that low is right there at 90 flat. Yeah, kind of, yep, right there. And when you kind of look, follow that price all the way over, it has the high right there before that up move right next to 2021 and right before March. Where it says March, right over that little high area. That's a nice little duality level. Now the market made its way up, made a high, found rejection. It got rejection 1, 2, 3 times. Yep, right around there. Got rejected 1, 2, 3. Then the market came down, uh, retested. Yep, right there at 31,315. And notice that that low lines up with the highs all the way to the left around August and October. So that was a nice little duality level the market came down to retest. So now the market is making its way up. So like Tiberius said, I definitely see this market going up. And I believe all the moving averages lined up too. Go to the monthly right quick and weekly. I just want to see if the 20 are above them right quick. 20 is above on the weekly. And go to the monthly. 20 is below. Okay, so it's still kind of the retracement phase, quote unquote. So let's actually drop down. So now our position, at least for me, like I told you, if the moving averages don't align on all higher time frames, I usually don't take the trade because it's not a high probability. But I would definitely give you guys some levels to kind of go on. So let's go to the 4 hour. So on the monthly, the 20 is below, and the weekly and daily, the 20 is above. So that's either saying one or two things. That's either saying the original direction is down, but the weekly is and daily is still letting us know that it still has a retracement move that needs to happen before it continues down. So where we are right now is a very, very good level. But I would definitely want to see prices come down to kind of retest some levels. So uh, for the buy part, so let me write this down. For the buyers, like we said, we always want to do buy low, sell high. Uh, what kind of sticks out to me too, right here on the 4 hour, is I kind of see a head and shoulders pattern again still, where we have the head around 92 200. Yep, those top head. Yep, those three heads. Those three rejections. 1, 2, 3. Yep, one, and go over one more. 2, and one more. 3. So those three, that might be a special needs person. We don't want to judge anyone, but this is a head that's sitting at the top. And then also look over to the left around 91 800. Yep, over to that. Yep. And look, those wicks definitely hit the 50 moving average. So for me, I would use a zone to kind of highlight the top of those highs and flash it all the way over. And I call that my head and shoulders band, which pretty much would be to let me know that this is an area that if it does reject where it's at, the head and shoulders pattern is going to continue out and possibly come all the way back down to the 91 400 or 91 200. Go down to the 91 200, 91. Well, probably not that low, but come up some. Yeah, so the 91 500 thing. Yeah, right, the 91 500. Right at the bottom of that wick, possibly. That would be probably my first take profit. But yeah, that I would use that head and shoulders band, follow that all the way over, and that would be the head and shoulders pattern. But if it does break through, I'll be looking for it to break through, retest, come down to retest a high area it broke in structure, and then I would take it up. So all in all, I definitely would stay on the side of the buys. Excuse me, the sell on this one. Um, and I'm waiting for prices to get at higher levels or possibly just kind of reject where it's at right now, and then we can see this market heading down. So let's look for for the buyers. Let me write this prices down. I don't think I wrote it down. The 91. I want to see it come down to maybe like the 91 600. No, all right, all right. Go up just a little bit. Right. Go to the bottom of the candles. Yeah, right there. So the 91 725. So I want to do like the 91 725. Go put your cursor on the 50 moving average, the tip of it. Pause. Is there? Can I get a quarter level? Yeah, can I get a quarter level out of there? Where is the 31 825 or 50? Go to go back down. Yeah. Go to the tip of the 50 moving average again. Sorry. That's 91 820. Yeah, so 91 825. Um, and the last area, which would have been the 20 moving average, but it's kind of looking like it's breaking through that. So actually, go put your cursor on the tip of the 20 moving average. 91, 91 950. Where is that at? Okay, doesn't matter. 91. So those are my. So that would be my levels. The 91 950, right? The quarter level, right by the 20 moving average. That's what I'm using my as reference. 91 950. I'm gonna go with that one. 91 950. So the three levels for buyers I'll be looking to get in at is 90. Uh, excuse me, I didn't say buy. Yes, I did say buy. I was kind of confused. So yeah, that's gonna be the buy, and we're only taking it up to the 91 200. That'll be around our take profit. So yeah, probably take profit at 91. Excuse me, 92 100. See how many pips that is from 91 725. Okay, 40. Um, and guys, pretty much I'm just looking to do a buy to set up for the sell. But my long term is the sell. I would want to believe. But like I said, I'm sitting to the side. So that is pretty much my levels for the buys. Sellers, we're pretty much looking for anywhere at the top. So the candle that's right over the 19th, that red candle. Yep, the top of the body, the bottom of the body, not the bottom of the body, the top, yep, right there. So pretty much I will put like a zone from there to the top of the wicks, top of the green room. Nope, going up. Yep. So that would be my area I would be looking for the market to come back into, to reject, to come back down. So hide your yeah, so actually that band right there, I should have just told you unhide your signals. That's the band I was kind of talking about right there, for the buy and for the sell. Um, I kind of now that you put that band up, it kind of changed the whole thing. So I think now I'm gonna have to try to change my joint because like that joint just kind of made me see something else. Uh, and I say that because I just feel like where we are right now, if we reject where we are right now, that would be a good sell. And for the buy, I kind of just feel like it wouldn't really do a buy right now just because it's been in a strong down movement. So cancel out the buy levels I just said. I'm sorry, guys. That kind of just changed the whole thing. I should just told him to unhide his signals. Unhide them because I need to get the levels again. So honestly, guys, I wouldn't look for a buy on this one. I would kind of put the buy to the side. I would just feel crazy even guiding you guys for a buy on this one. But for the sell, put your cursor at the top of the box. 91,
I
2.
got the prices right here in blue. See 'em?
Yeah. But I would probably wasn't going to do the top of the bodies. That red candle where we were. Yeah, at the same time, everybody. Yeah. 91, 725. And the bottom, and pretty much the bottom of the box would be my two levels. I'll be looking for a rejection to come back down to make our down movement. So that's pretty much my analysis on that one. That's where that band changed the whole thing. Like I that made it look totally different to me. Like everything I said was like, no, that wasn't right. So yeah, that band is actually at a very good positioning because that kind of really highlights the head and shoulders pattern I was just talking about, where the head is sitting at the top or above the box, and that shoulder is right over to the left, and we're actually sitting in the right shoulder or the shoulder area. And if it rejects right here, the head and shoulders pattern is valid. So that's pretty much my analysis on that one. That's crazy.
All right, so that right there, that's dollar twist. And then don't forget, we also have the Dow Jones from earlier. So now we want to go ahead and pass it to D. He has a couple pairs he wants to go over too. So let's go ahead and get into that right now.
All right, so you already know, guys, my good old. Let me show my screen. So you
I
know,
think
guys.
you're on mute.
Was I mute the whole time?
No, just from when you stopped talking the last time.
Did you guys hear me when I was talking about the box that you unhid?
Yeah,
Okay, I'm
yeah,
about to say,
just
wait a minute. All right, so AU is the first pair I'm kind of going to go over. We did, like we said, we did have a session last on Tuesday that just passed. And I know you guys, I know the game was on. That's why I made kind of a quick join because I know you guys were watching the game. Did I write down the level? Because I think I didn't have my. Okay, here we go. So the two levels, before I even do a top-down analysis, these are the two levels I was kind of talking about for the short. And pretty much what we were saying was that since it was in such a down movement, it would only be right to think that the market is going to continue down until we see the market break some areas. Kind of, I think I said this green line before we can kind of even believe the market is going to go up. So pretty much the idea we had was that this blue zone that we drew was the extreme that as far as we thought the market was going to go, because I think we were sitting somewhere. This is the daily that we was 2 days ago. What was 2 days ago date? Today is the 22nd, and pretty much it was this we was right here on the 20th. We were sitting down here, and none of these green candles even formed. I think we might have been even as low as here. And pretty much what we said was, in order for us or the market to continue going down, we would have to kind of retest some levels that it broke when it continued down. So pretty much the idea was the purple line was our kind of quote unquote our first line of defense, which was this was as the minimal we thought the market was going to actually hit, and that it was going to just continue back down. Then when we actually dropped all the way, I think we might have dropped all the way down. I'm not sure what time frame it was, but we placed this blue box, and I think it, if I'm not mistaken, we're gonna probably hit it on one of the time frames. But I bet you this box is gonna be right over this 7 moving average. We kind of had an idea like this is the furthest that we can possibly think the market was gonna go, and that this particular box was gonna actually be the best place to get in, or to get in the market again to bring the market down. But now that we look at it, what did it do? It pulled up right in our zone that we talked about last week. And I think these were the two zones. And the first one was 34, 125. This is was I think it was that green line too right up here, I think. What is it? 30. What's number 30? Okay, 74. 74. 125. Okay, so and yeah, actually I got it wrong. Not the purple line was the minimal area we thought the market was going to move. This was actually the minimal place we thought the market was going to move, and then this blue box up top was the extreme that we thought the market was going to go. So, kind of forget what I said before, not forget, but what I said before was wrong, and I apologize. Just because it was a little, I had to focus on which one it was. But let me delete some of this off. So pretty much between uh, these boxes right here, between I think it was as high as the green line, and this blue box was the kind of the one. So it was pretty much 1, 2, or 3. This blue box was the minimal. This was the second to minimal, and between these green lines where it lined up and hit this 7 moving average was the extreme we thought the market was going to do. So the market is heading in our way. So this was the level 1 we thought. So if it does break this level, we can probably see it start moving up into this level. If it breaks this level, then we definitely were right. It's going to come all the way up here. But kind of look where how this kind of candle formed right here. And actually, this price right here, there's 73,750. 73. Yeah, so pretty much, yeah. So it was here and here. These are the two boxes I thought were either going to be minimal and extreme. So I think since the way this candle just formed with the wick, it literally came back up. I think this is going to be one of those case scenarios where this is definitely just good enough. So I think it definitely hit that extreme level, and this was a very good area uh, for us sellers to want to get back into the market. So with that said, that was a review of the two prices that I said. So let's do our top down analysis. So I think I've always said over to the left where these two highs were, we said that if this doesn't get broken, then we really can't say that it's making higher highs and higher lows, or even think about buying. So we had this high, this wick literally came back above it, and look how where the body of the candle formed. It completed down below the 65 moving average. That lets you know anything up here or whatever is sitting up here, the market wants nothing to do with. So once we got that level, or it's quote unquote retest, the market has just been really, it played around again, but it's just been going down. It made two down candles, so we're intraday traders. We're not going to spend too much time in this. So this is pretty much the 7 is below the 65. We got a lower low and lower high right here. Let's flash down to the weekly. The weekly, the 7 is above the 65. But you can really see that lower low and lower high type of thing, where this little right here, this little area right here could have been a lower high and a lower low. Came down again. We got a lower high, another lower low. So we can probably definitely expect either another higher high, a lower high and a lower low, or this could be that perfect duality level where it lines up. It came down and even hit the 65 moving average. When the market was up here, what did I tell you guys? Anytime the market has that gap in between and the 7 is sitting up here, before it kind of makes its move up, it's almost like it's got to come down and hit that 65 level. And then it's like, yeah, we definitely out. We just had to go get somebody. We left somebody at the crib. So they came down to the 65 moving average. And now we can either see, like I said, either one or two things. Either the market break the 65 and want to continue back down, or they're like, finally, we got to the area we wanted to, perfect duality, and could be heading up. But just looking at this little, look at how that wick is formed. It hasn't even finished completing, but this almost looks like this wick looks very, very powerful, like the first start of maybe a V pattern reversal. So let's flash down to the daily. So on the monthly and the daily, the 7 is below the 65. And on the weekly is the only time frame the only time frame that the 7 is above the 65. So I would have to definitely try to lean on the idea that the market is still heading down. The down movement is still in control. Uh, so pretty much it looks like, for me, it looks like we got that hit of that area we discussed last week. I think maybe it has like another little push or to go just to hit that, but I don't want to get too carried away. But I think I want to drop down again because I want to see how are the candles forming after we kind of got here. Yeah, we are here on the daily, but when we drop down lower time frames, we can see what the market is going to begin to do. Is it moving sideways? Is it planning to break it, or is it setting up to go back down? So on the daily, like I said, since my moving averages are like centered around into my strategy, I would definitely, like I said, have to sit on the side on this one and wait for a little bit more confirmation. But I just feel like selling, I would have to just follow the direction of this pair, which is down. So I can definitely give you some areas for the nice down movement. And mind you, for every down movement, you need a nice up move, and for every up move, you need a good down movement, because that's literally what buy low and sell high really is, or pretty much is. So just looking at the 4 hour, if we wanted to go for a sell, um, what was I gonna say? I just blanked out just now. Oh, where we're sitting at right now is actually a good area because uh, if the market was down here, this would be too low of prices that you would want to hop in for a sell. If we were down here, we would actually want the market to come back up, which it did, and it kind of even retested the last kind of low over to the left. And this actually stands out to me as a nice little duality level. And when I actually squeeze this like this, where the top of this thing is here, pretty much the size of that green candle, that's letting me know definitely the market is sitting in that area, and it, to me, doesn't have any idea or intention to even try to break this higher level. I mean, it can, and if it does break this area right here, I can see it coming up to the 65. But we're not going to get ahead of ourselves, where I feel like the down movement is what should be played on this one. So the first level I would want to try to get into is, because Tiberius said his level was 91,725. No, I'm sorry. Did I write that down? This is dollar. Oh, he didn't even do it. I'm talking about your last period. Duh. We moved on. My fault. um, AU. So, like I said, we're planning to go down. Let me see. What I would pretty much try to focus on are this little middle area here, and I say this little middle area here is because I just feel like this is the area where it lines up with this little kind of low area here, and I want to play off of this level. So I would probably try to get an area right around at the bottom of this level. Let me see if I can just get a line. So I would try to use these duality levels or that levels where they line up as kind of like a guideline, so to say, on where I would want to get in at. So the first level I definitely want to try to get in at for the sell would be 73 750. So AU for the sell. What did I say? 73 7050. I want to try to give at least three prices. The next price I would definitely want to get it at is at the highest, or quote unquote the highest I would take it, the rejection level, which it has been doing. So the top of that would be, or a good area I would do for that one is 73 73 875. So I feel like any area kind of in this little box here, whether it's the top of the box, the middle of the box, or even at the bottom of the box, I would use kind of these prices to as a guideline for the short. Um, but I think this is for more of like traders who not experienced, but not really on the, what is it called, conservative side. I feel like more of the conservative side would be the break out of this so-called box first, and once it breaks that box, we would definitely want to see a movement up to retest that structure that it was just broken. So I'm just going to use the bottom of this green candle here, or even just the bottom of the box in general. And then is when we would uh, want to hop back in for the short, and we would only take it back down to a nice duality level where it lines up here. So a little bit more aggressive would be just kind of hopping in where I said at 73 750, right at the tippy top, because mind you, even if you did get in here, you would probably have a little bit more running room, which would be up to here, and then this would be actually the area where it decides to come all the way back down. The conservative is more of like, let me just wait for the candles to kind of complete first, uh, get that retest back up of the structure we just got broken, and once we see that rejection, complete close of the candle is when we would take it all the way back down. Let me see how many pips that is. Let's just say the aggressive would be 50, and the conservative I might be 25. Let's go with 40. So those are your two. To me, is kind of like your two options that I would suggest you even think about. I mean, you can use your own areas, your own prices, and if you did, I would say kind of stay closer to those quarter levels. So if you didn't want to use 73 750, you could do that 73 725, 73 775, so forth and so on. So I know I definitely said a lot. So Ty, tell me what you're thinking, bro.
All right, so when it comes to AU, I like the overall setup that we're seeing on the daily chart because For the most part, we are seeing a market that's finally in trending mode. For a long time, we were kind of sitting on top. We were making a head and shoulders a little bit a while back. It was lasting for a very, very long time. Now, we finally were able to break out of the head and shoulders, which is good for us because that kind of indicates that the move that we were looking at finally happened. It took a long time, but this market is based on patience. It's a patience game. So when we were finally able to see prices finally break the neckline, that started the overall initial downtrend that we were looking for. So now that we're seeing lower lows and lower highs, all we have to do is be patient and wait for the market to come back up to a level that used to be a previous level of support. But now that prices are below it, it of course becomes resistance. So we can find those levels at 74 even and very close to where we're at right now at around the next quarter level below at 73.75. So that's the level that I'm keying off of right now. I'm waiting for prices to break down below 73.75, and once they're able to do that and stay below it, that's where I'll be looking to enter the short trade. So I would want a candle that pretty much closes below the body of those two little double bottom wicks that bounce off of the 7 moving average. In my opinion and my experience from what I've seen, when you're in a retracement in a downtrend, usually the downtrend starts once you hit a key level. So we've done that already by hitting 74. And then you get a very bearish type of candlestick formation. So that's what we're waiting on right now. And if we get the close below those bodies that I was talking about, that's what we can look for. So for me, prices can get below 73.75 and stay below it. I'm looking for the short trade, looking to take it back to the bottom of structure towards 73 cents.
All right, guys, there you have it. Let me see how much pips that is from. You said from here 73.775, right?
Yep.
Let me write that down. 73.775. And you said you wanted to. I think it was right here. And you said you wanted to break it down to 73 even?
Yep.
That's about a good 72. Yeah, man, that's definitely a great move. Why would you, not why, but what do you think about the top here or maybe even the bottom here as your take profit? What made you take profit down here? And what makes you think, not think, but yeah, let's go with the first question. Why wouldn't you want to take profit here or here? Why would you take it so low?
Because when I look at the daily chart, I see that area as being the lowest price. Now, usually in a downtrend, once you come up and you establish that lower high, prices are going to move lower and eventually break that whatever level used to be the last low and create a new low. So in order for that new low to be created, it has to push past that part right there where we're highlighting. So that's how I got that up.
Okay, good answer. All right, man. So yeah, that's pretty much my idea on this one, which is the short. We're gonna kind of stay closer to that. Like I said, I can't and don't wanna give you any levels for buys because I just feel like that's not even morally right. I mean, buy is possible, but you would have to be really, really good to try to get that pullback or that retest because it might just happen really so quickly that you know advanced trader would only be able to handle. So we're all in for the sell. Is that right?
Yeah.
All right. So that's our analysis for AU. So let me write down your price again. 73.7. All right. So the next one I'm going to go over is gold. Gold has definitely been, I think, going down for not down, but it's been going up, but it's been kind of just making like a freaky way of going down, so to say. And I say that because there's certain signs that's kind of pointing that the bulls are in control, but lower lows and lower highs has just been forming so strong. It would kind of be like heading in for the buy, you would only be able to get a little bit of, or capture only a little bit of pips because it's really been making a lot of down movement recently. So let's do our top down. Oh yeah. So understand that I think I told you guys last Tuesday that if you definitely don't know or don't really have a clue on which direction of gold, I say gold, go, what was a pair that we can look at to kind of get an idea on which way gold is going? I'm gonna give you guys 2 seconds. That's right. Definitely the dollar index. Mind you, the dollar index is a negative correlation with gold, meaning that when gold is going up, the dollar is going down. And when the dollar is going down, gold is going up. So let's look at the DX on the daily real quick. And it just looks like up, up. And let's go over to gold. On the daily, it's been going down, down. So that's just a little key. I want you guys to kind of remember that if you don't have an idea which way is gold going, kind of glance over to the dollar index and feel it out and do your top down analysis there. Once you find that direction, all you have to do is go opposite. All right, so with that said, I think the levels that I kind of put last week, did I write them? I think I typed them on the thing. Did I write it somewhere? Let me see. No, I did not write it down. So I definitely don't have the levels of last week. I wish I wrote it down because I kind of went against what I always say is bring your notebook and pen, but I have it today. So on the monthly, we just kind of see it made that high, and we always talked about this previous all-time high in which the market broke. Once the market broke that level, came up and hit a ceiling, the market literally came back down into the area of the previous high, and it even broke out of it, out of that area where the previous all-time high was. But it didn't. It took no time for it to find a floor. It looked like it found a floor back in March. Between March and April is when it shot all the way down. It had a lower high and a lower low. It hit that floor, and then from there, we got that first higher high. It came down. Let me hide this a little bit. It came down, and we're definitely sitting in an area which would be valid for the first lower low. So if that is true, we should be expecting or be planning to see the next leg in the next higher high and higher low. So like I said, for this 1 month, we don't spend too much time. The 7 is above the 65. It found that ceiling, and it pretty much made its way down. Oops. Weekly, just a little bit better picture. It kind of shows you exactly where it got that rejection. So we got it up at 2050, and then it came all the way down at 1778. Came back up to retest that at 1950. It came down. So I think this was definitely it's kind of safe to say that this definitely was the end of that quote unquote down movement, and that it was just only looking to try to come down to here before it made its way up. But for some reason, I just feel like the market may possibly come back down to even try to retest this low down here, and hit the 65 moving average before it makes its way up. So let's flash down to the daily hook. The monthly, the 7 is above the 65. The weekly, the 7 is above the 65, and the daily. The 7 is the 7 is below the 65. So to me, like I said, around my strategy, I wouldn't take a trade. I would wait for a little bit more confirmation, and I think that confirmation of me kind of wanting to wait is that it probably wants to kind of retest some areas either again. No, I'm not gonna say that. I just feel like since it came down here and hit this duality level, I kind of feel like this is a low, this is a higher low, this is the first high, so I think it's gonna be making its way up. So um, let me try to find some areas I feel like would be good. Okay, so here on the 2 hour, um, like I said, I would stay to the side, but I feel like more in my gut, if I was to have to take a side, would be that I think the buy is definitely setting up, and I say that because once it came all the way down and it hit this wick, it bounced out of there so quickly that it had no rejection, no nothing. It just shot up, and everyone knows what this pattern is right here, or this formation. This is a flag formation. And which direction? What direction is a flag formation pattern? It's an up move. And kind of look exactly where it even came down to. It hit that 7 moving average. It looked like it's wicking right here at the bottom. So I feel like it's kind of safe to say is that, let me put this. I feel like buying would be best for this particular pair, at least for right now. But for some reason, I definitely feel like, being that the dollar index is going up, I feel like um, the down move is still kind of in play. Like I just feel like, hold on, let me just put this on charge. And that, I think that's what I was talking about before, like the moving averages, and even the higher highs and higher lows. That's kind of happening, but it's just moving down. It never broke any important areas. Hold on, let me go up here to the 4 hour. Yeah, I just feel like this one. That's why I said I wanted to stay to the side on this one, because I just feel like the down movement is possibly not even over. I just feel like, yeah, the overall direction is up on the higher time frames. Yeah, the overall direction is up, but it's just been kind of looking uppish. So that's why I just feel like on this one I definitely want to wait to the side. But let me give you guys some levels for buy first. So buy, I feel like where we are right now, if it rejects where we are right now, I feel like you can definitely take it up into these higher levels over to the left. And I think this is probably the area sellers want to get into to go short, to continue the trend down. So that's why I just feel like it just looks so crazy that the moving averages is kind of lining up going up, but we clearly see just down movement. So I want to highlight this left, or this low over right here to the left, and then that where we are right now, if it rejects where we are right now and can't break through, I would definitely want to take it back up into this duality or this high level here. But if it breaks this level, I can definitely see it coming back down to retest. So first, buy pretty much the break of the 7 moving average. Let's just say 1804 flat. So once we get that break, I feel like you can definitely take it at least first to your to this area at this high, and I feel like this should be your first take profit. I don't think it's a lot. I'm pretty sure that with gold is very, very volatile. I think you're looking at this right here. So that'll be first to go for a buy. And I feel like up here would be a prime area to hop in for the short, because we want to definitely sell at as high as a price as we possibly can. Um, so I mean, it just kind of left out of that area. So this also would be a area for the short. So I feel like where we are right now, I feel like you can definitely get in either way. Either take it buy up to here to set up for the short, or if it's down here, we would want to see it break out first, and then you would want to see the retest where it broke that structure, and the structure I'm talking about is right under this candle. Once that is respected, once it comes up and respects this area, I can definitely see it try to come back down to retest this red box right here. So um, yeah, so for sell, I mean, you can use around the same price. I feel like as high as 1803 or as high as 1804 and as low as 18 flat. So you can use 1804 flat and 1800. Yeah, and I just feel like yeah, man, tell me your thoughts on this one, man, because I'm kind of a little undecided on this one. So I would definitely probably stick to the side on this one. Tell me what you thinking, bro.
All right, let's go to the daily.
To the daily? Let me hide. Hold on.
Yeah, so for me right now, I see it looks like the market is setting up for a continuation of the overall larger down move that we've seen stemming from that top that we made over in June. We came up to around 1900, pushed a little bit past it, and then we had a huge sell off to the downside. Came all the way back to that next quarter level down below at 1750. Ever since that point, the market has been in retracement mode, and it retraced its way all the way back up a little bit past 1825 up to around 1830. Now, ever since that point, if you guys remember what I was telling you about for AU, when you're in a downtrend, all you do is wait for prices to come back up to a level that used to be a very important supply zone. Look for rejection. Look for any type of bearish candle formation that confirms what you're looking for. We have that with the bearish engulfing. And from that point forward, that's when you start to look for the next leg down when it comes to these types of movement in a down moving market. So now that we've kind of started to push down a little bit, I will wait for prices to maybe retrace back up to 1810, 1812, and then I would look to take a short trade and probably try and take it back down to around 1760. And then
Wait,
I
wait,
will
wait,
hop
wait,
out
wait,
because I
wait,
think
wait. Where was your entry you said? You said it mad fast.
1810,
1810 to where?
around 1760.
60?
Huh?
Alright, that's my fault.
Yeah, so that's what I'm looking for when it comes to gold.
Okay, so yeah, man, I think that's pretty much it right there. I think I definitely want to wait for a little bit more confirmation on certain things, but I definitely do feel like it's going to go down just because we were out of the wedge. We came down back into the wedge. It looked like we're kind of respecting the area in which we were respecting it before, like this. And now I can definitely probably even see it come back down to try to even test this uptrend line. So, like I said, we're gonna wait and see what it happens overnight for tomorrow's session. So that's pretty much my analysis for gold. So we're gonna move into our next section of the show, which is our exploration section. And I think we were doing dominoes, right?
Yep.
What's the ticker for that?
DPT.
Huh? What'd you say?
DPT.
Domino's? Yo, bro, you can hear me?
Yeah, just type in Domino's. It'll pop up.
Okay. So, right there, before we even talk about anything, do you guys see that? That candle alone is this more than 1% on a trade. That is big for a stock. If you were in a buy on this one, man, I'm pretty sure you made and had some good gains on this one. But I know this is Tiberius' specialty, man. He's in actual company, man. So drop some knowledge on the people about Domino's, Ty.
All right. So when it comes to Domino's, I think the chart that we're looking at is very important because the chart pretty much lines up with the overall reason and the overall, I would say, just the overall gist for why the stock is going up. If you guys remember from our market lessons class, if you missed that one, make sure you go back on our YouTube page on Bison Trading Show and look at our video. It's titled "How to Understand and Trade Stocks." It's a whole video about 2 hours long where we break all of this stuff down. But one of the main points that we made was that companies that have good looking charts like this typically tend to have good numbers that fuel the growth in that company. Because think about it, people only want to buy a stock if they think they can make money on it. You make money from good companies whose stock prices increase over time. And that's where the earnings reports and all of the financial and the overall macro environment comes into play because with stocks, it's more so about the numbers behind the company that drive the price of the share that we see. So if we go back and look at all of the earnings reports for Domino's, those are represented by these little uh, triangle houses down here. All of the E's down here represent the earnings reports that have come out. Now, when we look at this, we can see we can go as far back to 2010. That's when they really started their run. From that point forward, well, they moved from a low of they were $11 and well, really $9 back in 2009. From that point forward, we can see what's been going on. And if you look at the earnings below, all of the green represents a beat on expectations. So they earn more money, more net income than the analyst projected. You can see it's only a few times in the course of 10 years where Domino's did not beat expectations. And today, the reason that the stock was up by so much is because today the earnings came out, which is represented by this most recent green arrow. So let's check it out and see what happens. So the date, July 22nd, for the period that ended on June 21st. So that's the second quarter for this year. Every company reports earnings 4 times a year. So far this year, Domino's has reported 2 times. They beat it. They beat expectations every single occasion. The estimate this time was $2.87 in earnings per share. Domino's came in and beat it by about 8%. So they came in at 312 when people were expecting 287. So once again, they're performing at a higher level than what anyone expected. That makes sense because Domino's is more so of this is where it comes into understanding actual companies and what makes them better than others. Domino's uses technology to not only make pizzas better, make pizzas fresher, but get them to the customer and actually get orders in and out way quicker than their competition ever could.
And being that you said that, I definitely seen a commercial today that Domino's is going to start doing a driverless delivery. It's going to be like a little, almost looks like a remote control car, but a little bit bigger, and it's pretty much like a joint that has an oven on it, and your pizza's sitting in the warm until it gets there, and pretty much it just drops it on your joint. And I think it like either calls you or sends a text message, and then it just goes. It don't ask for no tip. It don't do none of that. So I didn't even interrupt you, but you hit a point. You hit a point right on the head when you said that. So.
All right, what was I saying?
You was just saying how today is why the price was going up and that it beat expectations. And
Technology.
yep.
So basically, the technology is just next level, and that's the reason that the growth in sales continues to do what it's been doing, which is continuing to grow and continuing to be better and better every time. So those are the types of stocks that you want to look to invest in when it comes to the market. Companies that consistently make more money, and more money, because those are the companies that usually have stocks whose charts look like what we're seeing for Domino's right now. So in terms of hopping into this chart, we're at all-time highs right now. So it's a little bit premature to hop in. Now we do have momentum to the upside. So here's the thing. If you're a short-term trader, you don't want to hop in right now. If you're a long-term investor and you don't have a position open already, you want to start building your position. So I would say buy maybe one share now, or however much you want to put into it. Nowadays with fractional shares, you don't have to buy the whole thing. So just start building your position. Don't dump it all into it right now because we're at higher prices. Just pick up a little bit and then wait for prices to kind of fall back a little bit. I would say they'll probably more than likely fall back to about 520, and they'll probably find a demand zone somewhere around that level. So if we can see that 520 level get hit, that's when I would suggest that maybe you add a little bit more. Not the whole thing, because honestly speaking, we want to wait for prices to come back down to 490, 480, but it's probably going to be a long time before that happens because the momentum is so strong. So it's in a weird position where you see that the chart is great, but from a business perspective, it's just better to get a little bit right here and then wait for lower prices and then put on your whole position that you really want. Because we know in the long term, if we base it on what Domino's has been able to do in the past, more than likely they'll probably continue, especially as the company opens up fully. They'll continue to do more numbers, better numbers, increase technology, make better pizza, have better ingredients, and continue this progress that they've been making so far. So this is definitely one of those stocks you want to keep your eyes on. I think we initially came to you guys when this stock was at 476, 480ish, and it's been running ever since then. So we want to keep looking at this. Make sure you keep this on your watch list. Long term, I think it could be a great trade and a great investment for you guys out there.
All right, man. There you guys have it, man. A nice little synopsis about Domino's and what it's been doing. So I hope you guys definitely had your pen and took some great notes because that was a great explanation. So with that said, right there, that's the wrap up of our exploration section of the show. So the next part of the show we're going to move into is my favorite part of the show, which is Traders Talk. So, like we said in thousands of other videos, man, Traders Talk is a very important section that needed to be in the show because, I mean, trading alone in this forex has such a bad name. I mean, my homie reached out to me today and was just like, "Yo, these people around here, man, they trying to get me on forex, but they got me paying all these monthly subscription packages, and I feel like they getting over on them." And I feel like some people are definitely getting trading or forex in a bad light. Trust me, guys. The real money makers in this trading and forex doesn't need to recruit anyone, doesn't need you to give them a subscription payment. They don't need none of that. They sitting back, grabbing their bag. So that is what I have to say on that. Secondly, man, I hope you guys definitely wrote those levels down for tomorrow because it's going to be lit tomorrow. We're going to be up 9:15 a.m. Eastern Standard Time, right? 15? Or what was it? 9:15 or 9:20?
Somewhere within there.
Okay, so that I know I had a point to make, but it kind of just left my head. It was kind of about like I can't remember it, but we definitely want to be here where we put it this section in the show for us because we want you to show you that this is all based on just how much time you put in it, man. It's like you're gonna get out what you put in. This is something that can definitely teach you, feed you, your family, anybody around you. And I'm sorry that some people has gotten misled or got their money taken and have a bad taste in their mouth about forex, but I promise you, this is definitely something you can make your money. I'm not saying it's such an easy thing. It's more like if you just do it every day, it gets easier. It's almost like riding a bike. Secondly, or thirdly, I should say, is uh, oh yeah, for stock, like we said, anytime that you're looking at stock, man, there's always that extra step, like Tiberius said. Go over into our episodes and see our how to trade a stock, how to get up those financial documents and what ratios you need to use, because you have to go over those ratios because you really want to see, is your company really doing what the chart is saying, so to say? Is the company really making money? So there's always that extra step with stock, because those things need to align before I would say you would want to prepare to hop in for an entry to buy a particular stock. You definitely want to make sure that the fundamentals, which are the equations and the financial statements, are the financial, and your technical, which is what we do every Tuesday, Thursday, and Friday, which is breaking down these charts, man. So uh, that's that on stock. But Ty, you got anything you want to tell to the people and want to send them home with?
Yeah, I would just say make sure you guys stick to your plan, whatever that may be. You want to be consistent in the market when it comes to what you do. Now, it's a lot of things to learn in the market, but don't think that you can just take somebody else's strategy tit for tat and use it the way that they do, because they see it and understand it from a perspective that is unique to themselves because they practice it, they know what works and what doesn't. So always stick to your own guns in the market. And of course, if you want to learn more about trading and investing, you can follow our page, our YouTube page, Bison Trading Show. More than 30 videos in our catalog, all of them more than an hour long, breaking down financial markets, whether it's Forex, futures, stocks, currency, bonds, NFTs, derivatives. We talk about a lot of things.
ETFs.
Everything, ETFs, all of that. So if you want to learn and continue to learn, make sure you check that out. And of course, you can follow us on our personal pages. I'm at Ty Trades Futures on YouTube and on Instagram. And then you can follow D over at.
You already know it's at IMDGUY, or you can hit that business page, which is at Pearl underscore financial underscore LLC. You know, hit me with a question, you got a comment, you want to review a trade, you want to chart up one day, man. I definitely want to hear from the people, man. I love you guys for pushing up on us tonight and rocking out with us, man. So, please, 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 man, hit that subscribe button, man. Please, please, please hit that follow button, man. Please, please go to our YouTube and hit that subscribe button. So I think that's pretty much it. You got anything else you want to say to the people? Nothing else?
Nope, tomorrow we're live 9:15, either 9:15 a.m., 9:20ish, somewhere before the market opens. Make sure you catch us on Twitch. The link is in the bio. And if you're listening, you're already here. You know where to go. Tell a friend, bring them with you.
All right. So for you guys who've been rocking out with me these last couple of days, that's where I've been rocking out solo. You know this is my favorite part of the show, and I finally got my boy here to rock it out. And if you've been watching the show for a while and you know our sayings, you should know what I'm about to say. Hey, yo, Ty, please take us up out of here respectfully.
All right, y'all. It's been a good show so far. I hope you learned something. Make sure you come back tomorrow so we can put all of these lessons together and really thrive in this market and show you how to get it done.